Welcome to MarketIQ Basics. Today, we're covering one of the most important topics for any trader who is serious about making consistent profits in the market, the trading system. What is it? Why do you absolutely need one, and how do you build one from scratch as a complete beginner? Let's break it all down. What is a trading system? A trading system is simply a set of rules that tells you exactly when to enter a trade, when to exit a trade, and how much to risk on each trade. That's it. It sounds simple, and the concept is simple, but the impact of having one versus not having one is the difference between trading and gambling. Think of it like a recipe. A chef doesn't walk into a kitchen and randomly throw ingredients together, hoping something edible comes out. They follow a recipe, a tested, structured process that produces consistent results. A trading system is your recipe for the market. Without a system, every trade you place is based on a feeling, a guess, or an impulse. You might get lucky occasionally, but over hundreds of trades, luck runs out. A system gives you an edge. A repeatable approach that, followed consistently over time, produces more winning outcomes than losing ones. Why do you need a trading system? There are three powerful reasons every trader needs a system. The first reason is consistency. Markets are unpredictable in the short term. On any given day, anything can happen. But over a large number of trades, a system with a genuine edge will produce consistent results. Without a system, you have no consistency, just a series of random decisions driven by emotion. The second reason is emotional protection. When you have clear rules, you remove the biggest enemy in trading, yourself. Fear and greed cannot override a rule you have committed to following. A system takes the emotion out of your decisions and replaces it with logic and structure. The third reason is the ability to improve. Without a system, you have nothing to measure, nothing to test, and nothing to improve. With a system, you can review your trades, identify what is working and what isn't, and refine your approach over time. You cannot improve what you cannot measure. The 5 core components of a trading system. Every complete trading system, regardless of style or market, is built on 5 core components. Let's go through each one. Component 1. The market you trade. The first decision in building your system is choosing what you are going to trade. Stocks, forex, commodities like gold or oil, indices like the S&P 500. Each market has its own personality, its own volatility, and its own trading hours. As a beginner, choose one market and stick to it. Trying to trade multiple markets at once before you have mastered one is one of the most common beginner mistakes. In our earlier videos, we suggested gold as a starting point. It is liquid, moves consistently, and is well suited to short-term trading. Whatever you choose, know your market deeply before you trade it. Component 2. The time frame. Your time frame determines how long you typically hold your trades and how often you look at charts. A daily chart shows one candle per day and suits swing traders holding for days or weeks. A 1-hour chart suits intraday traders holding for hours. A 15-minute or 5-minute chart suits short-term traders looking for quick moves within a session. As a beginner, start with the 1-hour or daily chart. These timeframes give you enough time to think before you act, which is critical when you are still learning. Shorter timeframes move faster, require quicker decisions, and leave less margin for error. Component 3. The entry signal. Your entry signal is the specific condition that must be met before you place a trade. This is the heart of your trading system. It answers the question, what exactly do I need to see on a chart before I press the buy or sell button? Entry signals are built from the tools we have already covered in this channel. Trends, support and resistance levels, candlestick patterns, and indicators like moving averages or the RSI. A simple example of a beginner entry signal might be, I will only buy when the price is above the 50-day moving average, the RSI is below 60, and the price has just bounced off a clear support level. Every single condition must be met before a trade is placed. If one condition is missing, there is no trade. The most important rule about entry signals, less is more. Beginners often clutter their systems with too many conditions and too many indicators. A simple system with 2 or 3 clear conditions applied consistently will outperform a complicated system applied inconsistently every single time. Component 4. The exit rules. Your exit rules are just as important as your entry signal, arguably more so. There are 2 types of exit rules every system needs. The first is the stop loss. As we have covered extensively in previous MarketIQBasics videos, a stop loss is a predetermined price level at which you will exit the trade if it goes against you. It is non-negotiable. Every single trade must have a stop loss placed before you enter. No exceptions. The second is the take profit. This is your target, the price level at which you will exit the trade if it goes in your favor. Having a take profit in place removes the temptation to hold a winning trade too long out of greed, only to watch it reverse and become a loss. A good starting rule is the 1-to-2 risk-to-reward ratio we discussed in our money management video. If your stop loss is $30 away, your take profit should be at least $60 away. This ensures that even if you win only half your trades, your account grows over time. Component 5. Money management rules. The 5th and final component of your trading system is your money management rules. This is where everything we covered in our dedicated money management video comes in. Your system must define clearly how much of your account you risk per trade, what your maximum daily loss is, how many trades you will place per day, and when you will stop trading for the day, regardless of how you feel. Without these rules embedded into your system, even the best entry signals in the world will not save you. Money management is not an add-on to your trading system. It is the foundation of it. To recap the framework we use at MarketIQBasics, your trading account is 10% of your total savings. Your maximum risk per trade is 3% of your trading account. Your maximum daily loss is 10% of your trading account. You place a maximum of 3 trades per day. These rules never change, regardless of how confident you feel on any given day. How to test your trading system. Once you have defined all 5 components, you must test your system before trading it with real money. There are 2 ways to do this. The first is backtesting. This means going back through historical charts and applying your entry and exit rules to past price data, recording every trade your system would have taken and calculating whether it would have been profitable over time. Most charting platforms, including TradingView, allow you to do this manually. The second is paper trading, which we covered in full detail in a previous MarketIQBasics video. You apply your system in real time using virtual money. This tests your system under live market conditions and also tests you, your discipline, your patience, and your ability to follow your own rules when the pressure is on. A system should be tested over a minimum of 50 to 100 trades before you draw any conclusions about whether it works. 1 or 2 trades, even 10 trades, tell you nothing meaningful. You need a large enough sample to see whether your edge is real. Common mistakes when building a trading system. There are 4 mistakes beginners make repeatedly when building their first system. The first is overcomplicating it. More indicators do not mean more accuracy. A chart covered in lines and signals creates confusion, not clarity. Keep your system simple. The second is changing the rules mid-trade. Once you are in a trade, the rules are set. Moving your stop loss, closing early, or adding to a losing position because your emotions are telling you something are all signs that your psychology is overriding your system. This is the fastest way to destroy your edge. The third is abandoning the system after a few losing trades. Every system goes through losing periods. This is normal and expected. A series of 3 or 4 consecutive losses does not mean your system is broken. It means the market is in a phase that doesn't suit your edge. Stay disciplined and trust the process. The fourth is not keeping records. Every trade your system takes should be recorded in a trading journal. The entry price, exit price, reason for the trade, result, and any observations. Without records, you cannot improve. With records, your journal becomes your most valuable tool over time. A simple beginner trading system. Putting it all together. Let's bring everything together into one simple example system that a complete beginner could start practicing today on a paper trading account. Market, gold. Timeframe, 1-hour chart. Entry signal, price is above the 50-period moving average. RSI is between 40 and 60, and the price has pulled back to a clear support level showing a bullish candle. Trade direction, buy only when above the moving average, sell only when below it. Stop loss, 30 ticks below entry for a buy trade. Take profit, 60 ticks above entry, giving a 1 to 2 risk to reward ratio. Money management, maximum 3% of account per trade, maximum 3 trades per day. Stop trading if daily loss reaches 10% of account. That is a complete, functional trading system. It is simple. It is clear. Every rule is defined, and it can be tested immediately on TradingView's paper trading account. Is it perfect? No system is perfect, but it is a starting point, a foundation that can be measured, reviewed, and refined as you gain experience and confidence. Final thoughts. A trading system is not a magic formula that guarantees profits. It is a structured, disciplined approach that gives you an edge over traders who act on impulse and emotion. The edge may be small, but applied consistently over hundreds of trades, a small edge compounds into significant results. Building your system takes time. Testing it takes patience. Trusting it takes discipline. But every professional trader in the world operates with a system, not because they have to, because they know it is the only way to trade consistently and protect their capital over the long term. At MarketIQBasics, our goal is to give you the knowledge and the framework to trade with confidence. Start simple, test thoroughly, follow your rules, and never stop learning. If this video helped you, please like, subscribe, and share it with someone who is learning to trade. Check the description for links to our money management and paper trading videos. They connect directly with everything we covered today. See you in the next one.